Hi, I'm Pat Keon, a Senior Research Analyst with Lipper, and I'm here to speak to you about the fund flows activity for the week ended Tuesday, December 4th. We'll start this week's report by taking a quick look at the market activity for the week. It was a shortened week of trading, and the S&P 500 index and the Dow Jones Industrial Average both suffered losses on the week. The S&P was down 1.6% and the Dow was down 1.3%. Both of the indices suffered the majority of their losses on the last trading day of the week on Tuesday, as the markets were impacted by investor concern over the continued flattening of the yield curve, as well as continued concerns over the potential of the ongoing trade war between the U.S. and China. The yield curve is approaching inversion. It's down to the 2 to 10 year spread now. It's down to 11 basis points. This is the lowest it's been since June 2007. And the reason for concern is if the yield curve does invert, it's a good predictor of recessions. It has been in the past. So that's why investors are concerned about it. And the market, it negatively impacted the market on Tuesday. Switching back over now to the U.S. and China trade concerns. The G20 summit ended without China making any specific concessions. So again, it raised doubt on the street as to the U.S. and China will be able to work out a concrete deal, or if we will see the trade war continue. That's enough on the market this week. Let's turn our attention back now to the fund flows activity. We'll start by taking a look at what happened with our macro groups this week. We saw equity mutual funds have net outflows of $12.4 billion. Taxable bond funds also had net outflows to the tune of $5 billion. Muni bond funds saw about $950 million leave their coffers, while money market funds, big outflows here this week. They had $34.4 billion in net outflows. We'll spend a little time now, take a closer look at each one of the asset groups, starting with the equity funds. We'll go through the mutual fund category first. As we said, they had net outflows of $12.4 billion. This is the 24th straight week of overall net outflows for this group, during which time they've seen $108 billion leave their coffers. In this week's activity, domestic equity funds accounted for the majority of the net outflows, with $8.3 billion leaving their coffers, while non-domestic equity saw about $4.1 billion leave their coffers. Over the 24-week period, the net outflows have been dominated by the domestic equity fund group, as they have just over $75 billion leave. We'll take a look at our equity ETF group now. They had net inflows last week, about $12.1 billion. The big players here were the Spider S&P 500, took in $3.2 billion in net new money, as well as the iShares Core MSCI Emerging Markets ETF took in $1.3 billion in net new money, while conversely, the consumer discretionary select sector Spider product saw outflows of approximately $556 million. Moving on now to our bond fund group. So we'll take a look at taxable bond mutual funds to start with. They had net outflows as well last week. As we spoke, they saw about $5 billion leave their coffers. Loan participation funds had the largest net outflow of about $1 billion. They've been getting pretty hard over the last few weeks. And while second on the list this week was core bond funds, which saw about $715 million leave. Moving on now, we'll look at taxable bond ETFs. They had net inflows last week. They took in about $183 million. This was paced by the iShares iBoxx investment grade corporate product and the JPM Ultra Short product, which had net inflows of $220 million and $197 million respectively. And on the flip side of that was the iShares 0 to 5 high yield product, which had net outflows of about $230 million. We'll move on to our muni debt fund group now. Net outflows here again last week, as previously mentioned. They had about $950 million leave. This is paced by General Muni, the General Muni classification, which saw net outflows about $548 million, followed by High Yield Muni, which saw about $155 million leave their coffers. The last group to speak about this week is money market funds. As we said in the intro, they had large outflows last week, about $34.4 billion, driven by two institutional peer groups, the institutional U.S. government money market peer group, as well as the institutional U.S. Treasury money market fund peer group saw significant net outflows. Governments saw about $17.1 billion leave, and the Treasuries had about just shy of $11 billion leave their coffers. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please take a look at our website, which is www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flow activity.